Welcome to Bar Charts Market and Close. I'm your host, John Rowland, Bar Charts Senior Market Strategist. Could Amazon be the the Toronto Blue Jays of the Magnificent Seven, going from worst to first? This morning I woke up and there was frost on the pumpkin, which tells me it's time to start watching natural gas. When does a statistical anomaly lead to a change in market perception? And timing is everything, once said a famous comedian. And for sure, the market surely has played a joke on me today. Thomas and I will debate if Apple is a buy at its all-time highs and all that, plus your questions. And to help me out, the aforementioned Twitter Tom and ARM Mr. X. Hello, Thomas.
Hello, John. How are you?
A little chilly today. A little frost on the pumpkin.
Yeah, here it's about 50, but a beautiful day. The sun is just out there shining. It's been a few days like that. So I'm back stateside, John. Came back on Tuesday, and I'm excited to know that we didn't get snow when I arrived because usually we do. But it's all good. All good here.
Oh, well, welcome back, buddy. We missed you. I'm glad you got back safely.
Yeah. Appreciate that. And we have a pretty exciting show. I think it's going to be really interesting for you guys. Just a quick reminder. If you're watching directly on our website, you want to ask a question, just click ask a question at the top right. You'll see it in the orange color. And then if you guys are watching on our social channels, just go ahead and ask those questions directly in the chat, leave it in the comments, and John and I will get to as many as possible. All right, John. So on Wednesday night, I was doing what most people do, which is, of course, charting on Bar Chart, just doing some research. And I just decided to check out the Mag 7 and see sort of what was going on with that. And I was absolutely blown away to discover that Amazon was in the red this year. I couldn't believe it because as somebody who owns Amazon, I actually thought they were having a good year like all the other stocks in my portfolio, John, but it's actually not the case. So it sort of, made me think back to another Mag 7 stock that we talked about, firstly in November of last year, and then again in June, July of this year. And that, of course, was Google. And for those of you following Google, it has absolutely exploded since we've done that segment, John. So I'm pretty stoked about that. And I was also stoked that I kind of stumbled across Amazon because I feel like this one is setting up to be another potential capital rotation. And then guess what, John? I saw this today. KeyBank. They say Amazon could soar more than 30% as investors begin to understand the company's AI story. So, John, when we did our planning, KeyBank was obviously sort of eavesdropping on our call because they stole our information. What do you think about Amazon, and what do you think about KeyBank taking our idea?
Yeah, it's funny because we're going to look at another story today, and it's really remarkable, like how you and I bounce these ideas back and forth, and then all of a sudden, like the market, the market jumps on us. So it's amazing how it happens. But here, let me show you my watch list and my Mag 7 watch list. And this is kind of what you were pointing out is that, Amazon over the last 3 months has been down 3%. And here's the other thing is that, since Google made that low that where we thought it was a good buy, it's up almost 60%. So good call on that part. But anyhow, I was thinking about Amazon this week because we had that, the outage in the AWS, and the stock itself has actually been kind of, in a downtrend because of, I think the expectations weren't as strong, or the results weren't as strong as the expectation for Prime Day, and then maybe some foreboding for the government shutdown, and maybe a little bit of consumer fatigue, worrying about consumer discretionary spending, so to speak. And you can see kind of how the market has changed from a technical perspective from a series of higher highs and higher lows to, this downward channel of lower highs and lower lows. But recently, though, this sell-off, from what was that last Friday, we did hold the black line, which represents our 200-day moving average. And now we're kind of stuck in this channel and below the blue line, which is our 50-day moving average. And I kind of call this the no hold zone. In other words, I still have kind of downsloping or flattish moving averages, and the characteristics of price action still is showing, even though Google at a higher time frame, it's probably, Amazon is in an uptrend. It looks like it might be in a correction or even a start of a bit of a downtrend. So, the outage that got me thinking on a macro perspective, and that was that, it just kind of shows you how vulnerable we are to, technology, especially when we single in on one particular technology. But in a strange way, Thomas, it showed me just how powerful and widespread, AWS has become. And to me, I think that is a positive story for Amazon. And so beyond here, right? So if we can get the Amazon above this channel and above the 50-day moving average, then I think, you got to also think about things like, we have tailwinds from passive investing. It's part of that cluster or concentration of the S&P, where we're going to get monies that are going to continue to flow into it. And next week is their earnings. And so, I was kind of looking at this as well under expected moves. Right, we have earnings next week, and the expected moves for next week's option puts us around 237.60. So going back to our chart, I think that sets us up to taking out the most recent highs, maybe the top end of this channel. And yeah, it gets us up to, the top end of this channel. But, that might set us up, if we look at this in a bigger picture, might set us up to, go for, new all-time highs. Certainly, I can't see the S&P, right, the index itself rising to all-time highs, which would mean looks like we're going to make another all-time high today, without Amazon. And we've said this before with the other Mag 7 stocks as well, right?
Yeah, and obviously earnings next week on Thursday, one day before Halloween. And John, we were kind of having a little debate about, well, earnings is a fairly risky event, right? It's always kind of nerve-wracking to hold shares going into an earnings event. So we were having a little bit of a debate. In my thought process here, John, on this one is the stock has done so poorly relative to the Mag 7 that I almost feel like bad earnings could potentially be already priced into the stock. So even if earnings come in sort of, against investor expectations, the downside might be a bit muted relative to normal situations, whereas the upside, if the company has blowout earnings, it just might go crazy.
It certainly seems like recently bad news is good news for a lot of these stocks, right? Although, you got to question is, if we have a blowout earnings, could good news be bad news for Amazon? I don't think that's going to happen. But I think, again, I think your point is well taken, is that maybe Amazon's decline over the last 3 months, or few weeks, is reflective of maybe this bearish idea that earnings could be, let's say, not spectacular, but maybe just average. Is that fair to say?
I think so.
Okay.
All right, so let's switch to commodities, John, and look at something that's very close to your heart, and that is, of course, natural gas. Natural gas, hasn't been that exciting for me, John, but I did notice this Monday that it had its biggest daily gain in more than 5 months. So it got me thinking, hey, this might be a worthwhile segment, John. For those of you who don't know, John, you were a pro nat gas trader for, I think, 30 plus years. So tell us, is there something going on here under the scenes for nat gas, and what do you think might come next?
Well, again, we talk about seasonality in gasoline natural gas, and we are coming out of a very short seasonal bearish time. It's usually about mid to late October to just before November. And the market has kind of been discounting natural gas for a lot of reasons, production wise, and maybe demand has been down. And again, we talk about weather, we really didn't have a lot of high demand. We're into that end of the fall. You don't need natural gas for electricity for air conditioning. You haven't turned on your heater yet, so there's kind of a slack period as well. But what has happened is of recent is that we had a few events that happened this week, and the first one was that we had some news stories, and one of them was the renewal of Russian sanctions. The other was that there was for weather geeks out there. One of these administrations that puts out these weather geeks, there was this anomaly that happens. And again, this is really bizarre, but it doesn't actually have an effect on natural gas. It's called a stratospheric atmosphere event, and that is something called the Arctic oscillator. And basically what it says is that the weather patterns at the upper atmosphere have now opened the door to allow Arctic air to flow into North America. And that kind of spooked some of the traders, which created a short covering idea or an event in natural gas. So what I wanted to kind of show you here is on this chart is how can I know if a buying opportunity or a buying action is something I want to join, or how can I discern what is a true trend, or maybe in this case a weak or short covering trend. And so what we're looking here is, we're looking at the price of natural gas, and you can see down here, this is called the open interest. And open interest is the number of contracts that are open that haven't yet been closed. And you can see the open interest is kind of steady. And this is open interest for the whole natural gas market, not just this one contract. And you can see prices have kind of been trading flat as well. But notice that open interest rises as price falls down. That is a sign of a strengthening trend. In other words, traders are entering the market on the short side. And in this case, it was speculators. But then we got those news stories, the Russian thing, the atmospheric thing, and also the weather forecast, a week ago turned bullish. In other words, it got chilly, right? We're getting some weather. And that created this spike in price. Well, notice what happened to the open interest, though. Open interest falls. So this is a falling open interest, means that this is buyers that are getting out of positions. Well, if you're buying, and what position are you getting out? Are you getting out of a short position? So this is a representation of a short squeeze. But moving forward, Thomas, I think what this does is it tells us that, we've probably squeezed out a lot of shorts in the market. Market is probably at a neutral position in terms of positioning, and that we might be getting ready for that next move. Now, again, I think weather here has to happen in the U.S., and if that doesn't happen, then natural gas prices will go lower. But we also can start looking at Europe, again, that TTF. And notice that during about the same time, we had an outside trading day. That was an effect of the Russian sanctions. And again, kind of range bound, but what are we starting to do? We're starting to make higher lows. So we're kind of in this range. So again, if we could see LNG prices in Europe go up, and we get some weather here in the U.S., I think that would be an expansion of demand, and we could see, an explosion in the price of natural gas.
All right. Very good, John. So we're going to stick in the commodities theme. It feels, John, lately like we have done a lot of gold segments. So we're going to stick with that theme and do another one. John, you noticed something interesting happening with gold, and that is it had what's called a 5 sigma move. Now, I've been out of college for about 20 years, John, so I'm a bit rusty on what that means, but apparently the probability of this happening was only 1 in 3.5 million. So tell us, what the heck is a 5 sigma move, John?
Yeah, listen, a sigma, or deviation, standard deviation. You might be familiar with Bollinger Bands. That's a 2 standard deviation. So in statistics, yeah, it's like 1 in 3.5 million on a double-sided distribution. Gaussian. Remember in statistics, you had the bell curve. Well, in financial markets or finance, they don't adhere to normal distributions. We get what is called fat tail events. So yeah, it's just very low statistical probability or almost an impossible probability in normal distributions, but in financial markets, it happens a lot more. Matter of fact, for gold, it's happened 34 times in the last 50 years. But it just kind of shows you, Thomas, how crazy this ride up has been for gold, and how vulnerable we were to a potential correction. Now, just to kind of give you some guidance and reference, the Black Monday crash of 1987 was a 20 gamma day. So that was, in statistics, should never happen. But in financial markets, they don't follow true statistics. And it's just a fat tail outlier. So what I think what is more important for us is, what does this really mean to us? And as traders, and also, not only understanding risk, but where we are with gold. And so what this does is it makes analysts and risk managers have to, remodel risk, and they have to better account for these outlier events. Now, this also means that they're going to have to reprice risk. And so what that means is that they're going to demand a higher compensation. In other words, they want to see a better reward for the risks that they're going to take on. So in other words, you're not going to see a lot of people just jump into gold now because of this event, right? Either they're nervous, or they're say, hey, is there enough reward for me based on this statistical event that happened? In other words, it's an increase in risk. So that also changes psychology and behavior of traders and the perception of what is possible. And so in a word, that means volatility. So we look at what has happened in gold here. We can see that on our Bollinger Bands, again, to statistical probability based on 2 standard deviations, this is the daily chart where we went outside the statistical probability, and then we've come back to what is called a mean reversion. But the risk of the 5 sigma tells us that we have to increase our reality, our probability. Normally, we would see gold would probably hold the mean here, but that brings in the lower band, which puts us down around that 37.77. Now, if we look at this from a weekly, remember we did this analysis where at the weekly level, right, we had the highest recorded level of, RSI, right? But again, notice what has happened now is we've went from multiple green candles to 1 red candle. So that brings in the probability of risk that we could get a mean reversion here as well. Now that puts us all the way down closer to 5,600. But a lot of times in really strong bull markets, you will only get maybe a 50% retracement in that upper range, the mean to the upper band. And I did an analysis on here where I took the upper band and I took the mean and I did a 50% retracement. And that comes in around 38.63. So you can see that between the halfway point at the weekly level kind of falls in line with, the lower level of our daily. I'm not saying the market is going to go there. I'm just saying that the market now has to price that risk in because of this 5 sigma event.
All right. Very interesting. John, we got a follow-up question with this, which is they want to know what your settings are for the Bollinger Bands here.
Just 2 standard deviations. You can see it right up here. 20 periods, 2 standard deviations.
All right. So, John, on last week's show, we discussed the idea of maybe some micro bubbles potentially forming in certain areas of the stock market. The one we talked about right at the start was quantum. And sure enough, quantum stocks have been dumping hard this week. In fact, a few notable ones lost more than a third of their value in 5 days. And that is what we call high volatility, John. Now, many of these are smaller names, smaller market cap, very risky. But John, I think you found a compelling quantum name that is definitely a household name, but perhaps a company people don't often associate with quantum.
Yeah, I've been kind of in this space, been watching this space. We did recognize IonQ of, I think it was in November of last year. but yeah, one of the forerunners in the quantum space has been IBM. They've been in this, you can think about Watson, right? That was kind of the beginning of quantum, um, uh, the quantum space. But we got this kind of rebound this week, right, with the quantum stocks. And that was because there was this kind of rumor that maybe we might get some government funding. And I read the article, and it basically was like, hey, they're going to put like $10 million in 5 particular stocks, and the 3 that we know, Rigetti, D-Wave, and IonQ. But that was later squashed by Besson, I believe. But if you think about it, for $10 million, remember we talked about last week about cash burn. Some of these companies are burning, $100 million a year. So, you're just talking about 1 month's worth of cash for them. And it seems like small potatoes for the government, considering that what we put, $10 billion into Intel. But it just shows you, the hype that is around quantum stocks. But IBM, I think, is a much different story, right? Not only have they been in the forefront, but they have the most quantum computers, and they are using them and lending them out to academia now, which is really interesting. And this is the joke on us. We looked at this week. Thomas and I were kind of say, hey, this makes sense to us, and it might be a great buying opportunity. But this news story came out today that IBM says they have just figured out this computing error with quantums, and that what they discovered is that this algorithm that they've developed is not only 5 times faster than what they need, but they can use ADM chips, which are ridiculously less expensive than their rival, who we know who that is. So what happened to IBM today? And I don't know if you guys saw this, but from the earnings from yesterday, they came out on Wednesday night. The market sold off on the earnings news, which actually their earnings weren't that bad. They just missed by a very, very small percentage. It's up almost 17% in 2 days. So talk about your meme stocks or your hype stocks. So again, I've been chasing this one for the last 2 days on the way up. I'm not going to chase it past here. I think this is still a stock that I would be interested in buying in the long run, especially when you think about quantum stocks. And I look at this from, a big picture fundamentals. If I know these guys, these investors and investor types. And if I told you, hey, listen, I could get you into the quantum space, but I'm going to put you in a stock that has a market cap of, $260 billion and $6 billion in revenue, and it pays a 2.5% dividend, which is what IBM does, then I think a lot of these guys would jump all over that. So I love the story. I love the stock. I'm just, unfortunately, I think I missed the opportunity for now, at least.
All right. So John, we've covered the most underperforming Mag 7 names. So I think it makes sense to maybe also cover the second most underperforming Mag 7 name. And that, of course, is Apple. And this is another one that our audience might be surprised, John, that it's doing so poorly, but because it's done so well over the last few months, but it's only up a couple percent year to date. And the reason we're talking about this one, John, is there was a headline from Barron's this week where they said that Warren Buffett left a reported $50 billion on the table due to his Apple sales over the last couple years. And, it sort of got me thinking, does he regret that decision? Does he think maybe I missed something in the Apple story? And we've talked about Apple a lot, John. We both love Apple products, but I think from an investing perspective, we maybe take a different side of the story. For me, I'm bullish at Apple. I own it. It's one of my larger positions. In 2020, I was an Android guy. Okay. And then I switched to an iPhone. I loved it. And then I switched from an Android tablet to an iPad. I loved it. And then I switched from a Dell laptop to a MacBook Pro, and I loved it. So I'm going to stick with these products. I always foresee myself being an Apple product guy. I'm not going to switch back to an Android. And I'm thinking, you know, if I love these products like this, I imagine a lot of other people do as well, which makes me think that this growth story, this bullish story at Apple will continue. John, do you see it that way in some ways, or are you sort of against it?
Yeah, I think the story with Apple is the iPhone cycle, right? I mean, we all, we all have, what you mentioned. You all have one. My wife has one. My daughters have one. And I'm sure a lot of us, we look down on our phone, we're probably overdue for an upgrade. I know that I do as well. But we all own Apple, literally, right? If you have any time kind of investing in some kind of index of either growth or the general market, you own Apple stock, right? So I think the story here is, of the stocks that are in the Mag 7, which ones do we want to purchase? And, we are making new all-time highs. So I'm going to just look at this from a technical aspect, Thomas, and that is that, we had, for a long time, we had a lot of resistance here. You can see, on the upside, I think it's around 258, but it was between 252 to 258, a lot of resistance. And then finally, we got a breakthrough. And one of the things that we always talk about is how to confirm a breakthrough, right? And we want to make sure that the market moves a certain percentage or distance that'll kind of confirm that strength of that breakout. And one of the things we can look at is our average true range. And one of the rules that I use is I want to use a 1.5 times ATR or a 2 times ATR to make that measurement. And you can see this is a moving average of it, and you can see how it's fluctuated. But it's been pretty consistent here, just under $5, $4.84. So if we do a $4.80 and we do it 2 times, or we do it 1.5 times, the breakout did give us just barely that confirmation. But if we look at this from the blue line, which is the all-time high for Apple, we did not get it. So it was kind of, when in doubt, maybe stay out. Now, the other thing I do like in market behavior is I'd like to see an impulse and a correction. And what I liked about this correction is it held above this little gap, and gaps act as levels of support. And now we're back above the all-time high. So again, when we did this story early in the week, to me, it felt more like it was a breakout fake out. But since then, and since the market now is making all-time highs, this is more of a bullish story. The question I have is there how much reward are we going to get out of this one? And this is kind of your point is, Apple has been on the move, but it's only up 5% in the year. Now, is this a story we're going to look, 6 months from now and say, oh, well, we could have bought Apple because now it's up 60% like we did with Google? I think it's a little bit different business potential than Google or Amazon than Apple. But I think to your point is that, we all own Apple. We all love the product. It's not really a phone. It's kind of this, what'd you call it? I forget, what was that expression?
A fashion accessory?
Yeah, not a fashion accessory. It has a utilitarian value, right? So I would be cautious. I would be cautious on the buy, but you can't make new highs without taking out old highs. I think there's, in this space, in this micro space, I think there might be some better opportunities, but I'm not saying that Apple is not going to go up. I'm just saying that maybe you could find a better winner. I don't know.
Yeah, and I think it's always important to put market caps in context, John. So Apple, it's a $4 trillion company. Amazon is a $2.4 trillion company. Google, when we talked about Google, John, it was about a $2 trillion company. So
right,
the larger the asset, the more capital it takes to sort of push those prices up into the moon, right? So I wouldn't expect Apple to just suddenly go up 50, 60% like we've seen with Google. It would take something extraordinary to send it up that high, that fast.
Right. It's definitely in as as a phone company, and again, I don't want to belittle Apple. It's definitely its growth story from, let's say, 10 years ago is a lot different than it is today, right? It's not I would say a mega growth story. It's probably a slow growth story, right?
Yeah, I think so. All right, I think that wraps up our main show, John. Again, guys, if you're watching on our social channels, John and I would be very grateful if you give it a retweet, if you give it a like, leave your comments, let us know what you liked, what you didn't like, or maybe just if you agree with Amazon being a good investment. We'd be love to hear what you have to say about that. John, are you ready for some Q&A?
Yes, I am.
All right. So, question: does Amazon have an inverse Head and Shoulders? I think you saw it a little differently, right, John?
Actually, I thought it looked like well, I don't know. I mean, let's take a look at it. Yeah, I kind of thought it had a look more Head and Shoulders, right? A kind of left shoulder, neckline, head, neckline, right? Right shoulder ish, right? Now, inverse, maybe not at the daily level. Maybe let's change the low to a lower time frame. Let's say 30 minutes and look at this. Yeah, I could see that. I could see where somebody sees, so you have an inverted inside of a higher time frame Head and Shoulders. You got to look at this neckline here, and what's this neckline at? Around 218. The low is around 211, so that's $7. So if you break above 218, $7 puts you around 225. So you've reached your expectations of your inversion here.
Here's the $1 million question. What should somebody be looking for a fair stock price, John? Should they use a forward PE ratio or something else?
Yeah, I think you and I are in this camp, right? I'll leave the fundamentals to the analysts, right? And I kind of believe in that, that efficient market theory where, all information is discounted in the price of the stock. I think that's kind of what you believe as well on fundamentals. So to me, I think I look for, structure. Price tells me a story, right? And so I kind of lean on technicals. I mean, I do lean on technicals. I mean, you could kind of feel the same way, right, Thomas?
Yeah, absolutely. I'm not a fundamental guy, and to be honest, my approach to fundamentals would just be looking at an income statement and being like, did it go up or down? But that's kind of dumb, right? There's people who specialize in this. They spend their whole life doing this. I'm going to leave that part to them. Fundamentals is particularly challenging for tech stocks, right? Because at times I look at the price of a tech company and then I look at its P ratio and it doesn't match up. There's something completely amiss. One of your favorite examples of that, John, is Palantir.
Right? Yeah.
How do you value that when you're so far off from what the market thinks?
Right. I mean, what's its forward P is like 400 or something crazy like that, right?
Yeah.
So exactly. So it's disconnected from fundamental analysis, right? So leave it to the folks that are a lot smarter than me. And go ahead.
Let's see. Any concerns about the tariff talks next week?
Yeah, I do think so. I'm always worried about things that black swan events we don't know about. We know that the tariff talks are coming, and the market, I think, is pricing in that something positive is going to come out of it. I don't think the market is pricing in the risk that talks break down and we continue to have the stalemate between us and China. So yeah, I'm definitely I think that will bring more volatility to the market.
I, for one, am tired about tariffs, so I'm sure a lot of people feel that way.
I know you say that every week, right? It's like the wall of worry, right? It just market doesn't care; it just keeps going up, right?
If I didn't hear tariffs ever again, John, I think I'd be okay. Do you think the NASDAQ 100 could be in for a correction in next year or anytime soon, John?
Well, it's certainly if we move from an earnings growth, again, fundamentals, to slowing growth or actually declining growth, then I would say, yeah, tech stocks would be in vulnerable to a correction. Again, you got to look at CapEx, right? Cap spending in the AI space. As long as that continues, all these people have made these commitments. for spending. As long as that continues, then I think it decreases that potential. Now, the outlier here is that AI might not perform like what it is expected to do, and there's been a lot of uh, data or these white papers among individuals that are in the space are telling us that we're starting to see some weirdness in a lot of these AI agents and these large um, models. So maybe we'll leave that for our discussion another time.
For nat gas, John, do you recommend people trade the futures, or do you recommend they trade it through another way, like an ETF or equity?
Yeah. So I've always said this is like, if you're going to trade a commodity that if you can afford it, and again, there's a lot of risk and you have to have the right amount of capital, that you should always look at the futures first, because of the leverage that you're going to get. And then from there, you could trade, let's say, the ETFs that are related to it, for instance, UNG, or you could trade the leveraged ETFs like BOIL. And then from there, if let's say that's too risky for you as well, you could look at those companies that are associated with those commodities. In other words, I've always said that, one of the stocks that I have in my portfolio is EQT, which is a natural gas producer. But, you think of like Cheniere, which does LNG, right? That byproduct, right? That ripple effect. So, yeah, I would start with futures, then I would look at the ETFs, or leverage ETFs in terms of risk and leverage ETFs, and then the actual stocks that are in that business.
John, we got a question about if you could do a short analysis for current end of the road stocks, NGRC or Newmont Mining.
I was looking at Newmont because I was really surprised that had happened, right? Because you think about what has been going on in the precious metal space, but not only precious metals, but copper and all the other metals. And I was very surprised to see this. I didn't see what the story was, if this was an earnings story or something, but I actually looked at this one, and this was an idea that I had. Now, what we normally see, let me change this to a little bit lower time frame.
And it was earnings. I believe it was earnings related because
was it earnings related? Okay, yeah. I mean, we could go here and just turn on our earnings and see what it was. Yeah, there you go. But it was falling before then, right? And the end of the road gap was probably this gap here, right? Not necessarily the earnings gap. So, again, end of the road gaps, right? You have to have an uptrending market. Then you get, let's remember our three moving average, 20, 50, and 100. We want to see the gap fall, not only fall a certain percentage, but also fall through one of these moving averages. And what did it do? Well, it fell through, and then it went and found that next moving average, which in this case is a 50. That is normally what we see. And then what we want to see is either the market stabilize here and then come back and try to fill the gap, which maybe it did there. But now we got two gaps on top of us, which is, again, a little bit more bearish. From here, then we would say, well, if we broke the 50, we got below 50 again, do an ATR assessment on that one, then I would look at, the 100 and 200-day moving average. But if we hold the 50, and then I might look for a better shorting opportunity, let's say closer to where we saw this original gap. So again, we're kind of in a wait and see period based on the end of the road scenario.
Yeah, the only thing I would say about this one, John, because I'm only bringing this up because I looked at this morning. Newmont versus gold miners, GDX, they're both down about 8% over the last 5 days. So as bad as Newmont looks, it's sort of right in line with its overall space.
But listen, let's think about what we just talked about with gold, right? We said that 5 sigma day in gold is going to make those who are in that space reevaluate risk, right? And so this might be a reflection of that, right? Money managers who didn't want to play gold directly, wanted to play it through the miners, to say, oh, you know what? There's too much risk in gold right here for me, and I need to reassess my position. And maybe some of these have been in some longer positions to say, hey, maybe it's time for us to, rig the register, or at least lower my position size to accommodate for that greater risk. What do you think about that?
Yeah, makes total sense. John, I know this isn't your specialty, but do you use, we have our Gamma page, right, on the website.
Yes.
It's fairly new. Do you use Gamma at all in your options trade?
I do. For let me start. I don't do it for every market. I kind of look at it for like, here's the S&P. I will kind of look at it to kind of help me decide if I'm looking for a big move where I want to see that acceleration of that move based on the gamma exposure. But also when I'm trading indexes, if I'm doing some kind of credit spreads, where I want to know where my risk basis is. So for instance, for like in the S&P, right? We're market's already closed, but here's the gamma on the top. So that kind of keeps the cap, right? The market maker wants to keep it below that price. And then where would be the gamma exposure to the downside? Last week we said, going into next week, what I think is going to be an important week for us, is that there was a large gamma exposure at the 660 level. And then beyond there, I think there was even a larger at the 650 level, which correspond with our 50-day moving average. So again, that would be more of a huger catalyst to a downside movement if we got into that gamma area. But again, I don't look at it all the time. I just kind of use it as maybe a guide where I think where price is going to stay. If I'm trading for a shorter period of time, making a swing trader from like week to week or a couple of days, and then I know where there is risk. For instance, I was taking a short, I want to know what my upside gamma risk, or if I'm taking a long, what my downside gamma risk is.
Yeah, and for those of you who want to dive into this more, we've done about 4 or 5 webinars, videos on gamma. So if you go to our YouTube channel and look for those, you can really dive into that. We had, with John talked about it. We've had some other collaborators like Gavin talk about gamma as well. So definitely give those a look when you get time.
Those guys are a lot smarter about options. Again, I just use it as more of a tool to kind of help me frame a range of probability, All right. You can get the link to YouTube right there.
Yeah. John, at risk of you reaching through the computer screen and just strangling me to death, I want to ask, because we got this question, can you do an analysis on Palantir?
Well, Thomas knows what I think about Palantir. It's like my Harry Potter, it's the name that we shall now mention, right? So
so you're going to politely decline.
I'll put it up there, and maybe some of my lines are still up there from the last time we looked at it, but yeah, I would. Not Palantir. What is it? What's this? I forget this here. PLTR, right?
Yep.
There we go.
You probably rather own Pantera than Palantir, right?
Pantera. It was a great band in the 80s, right?
Yeah.
Yeah. I'll just leave it as that. What does that look like to you?
Head and shoulders a little bit?
No, I mean you're still in an uptrend, but what's it done since August 18?
Double top? Looks like a double top there.
Really hasn't gone up and hasn't really gone down, right? So
just FYI, Jim Cramer said this morning he thinks Palantir is going to 200. So take that for what it's worth.
Yeah. Well, there you go. Was the anti-Jim Cramer effect, right?
UNG, John, we got another nat gas question. They say that UNG has only gone down this year and has not moved up in years. What to do about UNG?
Yeah, that's a problem. The blue line here represents the spot price of natural gas. So it does reflect what is going on in natural gas, but you can see that, since the middle of or the first quarter of this year, it's been in a downtrend, and that is reflective of what's going on with the spot price of natural gas. But I don't see where you're saying it hasn't gone up. I mean, look, last year we had a huge run up in UNG. Again, this is that leverage idea. If you're going to trade natural gas and you're bullish on natural gas, which went from like low $2 to like $5 last year, um, what did this the ETF do? Well, it went up what, 30-40%, where if you were in the commodity itself, you had that kind of move that you would have gotten like a 300% return on your money. Again, a difference between leverage, that's all.
Yeah, but if you pull up like a 10-year chart, it's just gotten absolutely crushed. And I don't think a lot of people they understand Boyle, but they don't understand they don't understand the mechanics of UNG. They think if you just hold it for years, you should do well as
right. Exactly. You have to understand that it's recalibrated, right? It's recalibrated based on the derivatives they use. So yeah, you have a lot of what is called decay in these kind of commodity indexed ETFs. So yeah, but if you look at what natural gas prices have done during the same time period, do I still have my natural gas up here? Let's look at a monthly 5-year. You're going to probably see a similar story. Let's look at monthly nearby, right? Right. I mean, we did peak in 22, but yeah, I mean, natural gas prices have come way down since what was that? October of 22.
John, did Alcoa get its groove back? That's a name you used to talk about a ton. But
I love Alcoa. It's one of my favorite stocks, and I've been waiting to buy it, and I don't know why I missed it. Oh, this is like a dagger in my heart. Yeah, I really feel like this is a stock that, it's gotten a little accelerated of recent, but yeah, I just feel like this is a stock that another stock that I missed the opportunity on. We talk about the AI story, talk about EV story, right? I think one of the stories that people don't understand is that aluminum is a real important part of all of this build out and production. And yeah, there's a lot of interesting facts around how aluminum is created. Matter of fact, it's one of the most expensive metals in terms of the amount of electricity that they use to make it for smelting. So there's a lot of bullishness to this story. So this is a stock that I really, really like in the long run. If you believe in this idea that, a debasing of fiat currencies and running to buy hard assets, I think this is going to be a story that is not over yet.
Going into heavy earnings season, are there any high probability setups for major mega caps? I mean, for me, John, I'm going to just stick with Amazon. I like Amazon the best just because I feel like the risk to the downside is muted, and a lot of trading is about managing the risk. So I feel like Amazon's downside risk is muted. I haven't looked at a lot of the other big names, but for me, I feel like Amazon has the best chance to do really well.
I agree with you 100% on that one. That's where I'd be looking at. Yeah.
All right. Last question for the day, guys. International ETFs, John, it seems like they might be overextended with many having RSIs above 70. Of course, 70 is nothing in comparison to what we saw of gold lately, right? But
right.
Do you think that this means that these ETFs are positioned for a correction?
Yeah, again, I haven't really looked at this one. Let's see if we can pull up Europe, right? He said.
Yeah, any international ones. Could be China, Asia, Europe.
Well, I think you have to really distinguish between which segment. I think Chinese stocks have been on a tear. Europeans have been kind of pulling back, but you look at. I know that South Korea is definitely doing well. One of the ones that I'm, in full disclosure, I still like the Japanese sector, although it's kind of slowed down as well. So, to generalize all global markets into one sentence, I would say you really need to look at the individual sectors. So, again, let's look at this from a performance rate. These are the European ones. What is your 52-week and what has happened over the last 3 months, and then I would compare it to what's going on with the U.S.
Yeah, very good. And just remember, RSI is above 70. It can just mean that it doesn't mean it's due for an immediate sell-off. It just means that it's overbought,
right.
But they can stay overbought for a very long time. So
right, it just means the conditions are right for a potential correction. Doesn't mean that the market's going to crash.
All right. Great show, John. Guys, reminder, John and I are actually going to go trick-or-treating together next Friday, so we'll be off for Halloween. We will be back the week after, so enjoy next week and take a break.
Yeah, enjoy Halloween, everybody. And thanks again for spending time with us. I know Thomas and I, we work hard on our shows. We try to bring you guys some alpha. Sometimes our timing is great, and sometimes the market throws us curveballs, but at least I hope that you guys get something out of today's session. So until next time, best of health, manage your risk, and the good of all trading.